Good morning, all you wonderful individuals out there. Good morning, good afternoon, good evening, depending on where you are in the world. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. So, big day yesterday, right? Big day all across all markets, all assets. Let's go over here real quick just to look at the VIXY. This asset's what we were looking at last Saturday's upload, not this previous Saturday, but the one before. We were coming into this area of support. This is the same line that was drawn less than 2 weeks ago, right? And we were looking for this asset to come into support. Simply because in bear market lows, in all of risk markets, the VIX typically tops out, right? You got to be topping out before you can even consider a low being in, which is why last Saturday I was saying that, when we pull into support like this is like, it's like looking for continuation. It's not nowhere near the lows. And you can see just in 4 short days, this thing is boom, exploded to the upside. That's a $10 move on the VIX inside of a week. It's a pretty big move on the VIX. Now this thing can get rocking and rolling, as we've seen, back on March 2020. This thing just absolutely exploded to the upside. So that's what we want to see before we can really mark a bear market low. Now we have exploded to the upside, and even the VVIX as well has done the same scenario here. But as I was saying, we wanted to see this get into support. We wanted to see this thing rise to the top, right? This was pulling back for weeks and weeks as the S&P 500 was pulling back and everything else. So now we're starting to see that volatility in the VIX. We're starting to see the VIX itself rise. Bitcoin come off a lot yesterday. So yeah, let's go over here and look at this real quick. Saturday we were discussing that since we did not see any spikes on the long liquidations, we knew that we had been seeing a lot of accumulation going on all exchanges according to the trend score metric. Out of 30 days, 15 of them were a complete trend score of 1. And since price started to roll over a little bit before we had the CPI print, we were not seeing any long liquidations. So that basically told us that, hey, nobody's getting liquidated yet. So either the stops are super low or, this thing, well, that's it, right? The stops are super low. And then boom. I mean, that is a massive liquidation spike. So anybody that thinks that this is not a long squeeze is sadly mistaken. This move is why you're seeing, the size of the move is why you're seeing that. It's the liquidations of all the longs. That is the definition of a squeeze. In a short squeeze, you are liquidating all of the shorts. That's why price fires up to the upside. All the shorts get liquidated. That causes a cascade of buying pressure. Instant buying pressure. That's what we seen yesterday. Once Bitcoin got down below that swing low, that what everyone thought was the capitulation wick low, you started to see a massive move to the downside. That's because people were absolutely getting liquidated. So let me see something real quick before we go any further. Just bear with me. Uno momento, por favor. All right, so let's pull this over here. Wait. I don't know. Hang on. Just give me a second. I'm kind of still looking around. All right, so down here, 19,891. That is your old all-time high. So Bitcoin has never even come close to retesting an old all-time high. Let's go look at the BLX index for this. We're going to pull up the weekly time frame. We're going to scrunch them up pretty good here. Let's get rid of all this stuff. We'll just remove all the drawings just like this. So, Bitcoin operates on cycles, right? The 4-year market cycle. The reason that there's a 4-year market cycle is simply because we have a halving every 4 years. Now, these are not going to be accurate as far as the halvings are concerned, just because I'm just trying to whip it up real quick. This is what it looks like. marking the red lines as the halving. Remember, these dates may not be the exact dates. I'm just using this as a representative tool. So like this is why you have the 4-year market cycle. You've had 3 halvings. So each time you've had a massive push to the upside inside of the halving, then your blow off top, that marks the market cycle top or your peak. That's why over here in March 2013, this wasn't the high, simply because we had a new high inside of the halvings. So a lot of people say, Bitcoin has retested an old all-time high, and it was here. You're correct. At the time that this swing high was made, it was an all-time high. However, you did not test this area until you made the second high. So this is one market cycle. These two peaks cannot be, distinguished as two different market cycles. It's inside of one. It's inside of the 4-year span. So that's your all-time high. So if you just draw a line, I'm sure you've seen this a blue billion times, especially if you've been following me for any length of time. Here are your market cycle peaks, right? Here was this one. Once you broke out, you did not come back and retest it. Not for a little bit. It didn't happen. Over here, same scenario. Your bear market low was almost 50% or 100% higher, over 100% higher. So, we were kind of looking for that to occur again. If you remember, when we made this $60,000 high, people were still looking for a massive move. Remember, everybody was looking for, $200,000 based on the percentage gain from the halving. So previous cycles, you get massive gains once you hit the halving. But the thing to keep in mind, so that's 22,000% there on that one. This is where they also get the diminishing returns from, 4,600% there. Because obviously when you start getting up higher in price, it becomes more difficult to see a 4,000% move. If you're trading, at $100,000, do you really expect to see a 4,000% move? Just think of the amount of liquidity that is needed in order to basically get you to a market cap that size. So, technically, you do see diminishing returns. You can see it no matter how you look at this asset, no matter how you look at it. If you judge it from percentage to the cycle peak, you've got that. If you distinguish it from looking at the amount of time that it took to reach cycle peak, you've got that. One thing that we have seen, though, in all 3 cases is the market cycle top was called in November, December. It happened in every previous cycle before. That's why come November, December, we were looking for that to be the top, simply because of that. Then the Fed came out. Remember, the Fed is the bull market. The whole bull market that we've seen since 2008 is done solely on what the Fed does. Investors are making investing decisions based on what the Fed does. So, 2008 is before cryptocurrency was even in existence, okay? Before cryptocurrency was even in existence, this world economy was in something known as quantitative easing. Back in those days, it was called TARP, T-A-R-P. So it's the same thing, where the Fed actually steps in and starts purchasing assets in order to put a floor under the market to entice investors to come back to the markets. That's the reason they did it. It was supposed to be a thing that only lasted for a little while. Unfortunately, it has lasted from 2008 to 2022. Basically, what I'm trying to say is cryptocurrency, Bitcoin, they have never seen inflation and they have never seen quantitative tightening. Bitcoin and cryptocurrencies were not around before those two things were even a concept. So, here is your old all-time high, right there. And I believe the low, what was the thumbnail? $20,100. Let's go back over to price real quick just so we can get an exact low. There we go. There is the low. It is $20,816. So you're literally $1,000 away from hitting the old all-time high. So is it possible? I don't only think that it's possible, I think it's going to happen. All right. So, and this is why. This is the first time, this is the first week we've gotten that was a pretty big move. And this is happening after the CPI and before the FOMC. Now, is it possible that this is the low for this week? It's possible. I mean, it was worth a gamble. I took a small long down here last night before I went to bed just to see what happens. That position is up pretty good this morning. But I already took profits and everything. I've already moved my stop. Everything's situated. And I did add to the spot account simply because we're coming into area that historically has been a good spot to buy Bitcoin. But can we go much lower? My question is that's the main question. Is this my low? Is this the low? Chances are no, right? The likelihood is not, because we're not topping out on the VIX. We're not topping out on the VVIX. We're not doing any of that stuff. But let's go look at all the historical reasons of why a person might want to pick up a few Bitcoins where we currently are. First and foremost, let's go back to the 200 simple. All right, so this is your 200 simple moving average. Now, when we first hit my target of 26K, we had hit the 200 exponential. And back then, when this capitulation candle was put in, I said that, we still have a long ways to go to hit that 200 simple, and Bitcoin typically hits them both, right? Typically hits them both. Now, this is as far as we can see on this, but it goes back in the BLX too. And something else that was new, this was these two indicators were spread out from one another a lot more than they were in the past. Let's go to the BLX for this again. There was one time here, right? That's the 2017 where you started to see these two indicators get some distance between themselves. Bear market, you hit the 200 exponential. This was the last bear market phase we had. Boom, there's the 200 simple. That pretty much ultimately marked the low in 2018. Now, this is an outlier. We typically don't use this bout of price action when we're looking at macro stuff like, looking at potential areas to look for, bear market lows and stuff. Back here, 2013, 2014, it took multiple weeks, guys. So from the first time that you hit the 200 simple moving average, that was January the 12th, 2015, and then till you started to get away August. So how long is that? January the 12th to August 31st? That's a long time. That's a half a year, a little more than a half a year. 8 months that once you hit the 200 simple, you traded in a range inside of it. Right there, right? All of this. So be prepared for something like that. Do not think that you have to go out and start buying today, because there's a good chance this low will get liquidated at some point. And there's a good chance that we can trade, in and around this area for 6-8 months. So prepare yourself for that. In the bear market low over here, I remember this as plain as day. It was funny to watch Twitter blowing up, melting down, whatever you want to say, when this thing essentially shut down. It just essentially shut down. I mean, there was days where this thing hardly even moved at all. You know what I mean? For like weeks, it was very slow, very vicious on people. I mean, these are ticks almost on the daily time frame. Very small movement, muted movement, if you will. So, I mean, we could see something like that occur. We could see a lot of things. We just hit this low, and then we traded sideways for 3-4 weeks. Put in this low. Is this going to be the low where we trade sideways for another 3 to 4, 5, 6, 8, 10 weeks? Absolutely, it's 100% possible. So please understand that you do not have to be in a rush to buy this asset. All right, so that's the 200 simple. We have hit it for the first time. Here is oversold on the RSI. We have hit oversold on the RSI on the weekly time frame. And as you can see, we went over this in Saturday's upload. This has typically marked the lows of the bear market, right? Right there, you hit oversold, that was the low. And then once again, it happened over here in 2014. Boom, there's your low, there's your oversold. Now, you did come into oversold here on this one, then you traded up for a lot of time, and then you finally rolled over to hit oversold. We did that a little bit, but not quite as long as we did on this time. So yeah, that marked the bear market low too. So I do believe that we're potentially coming into an area where this thing could potentially start to bottom out. But just understand that each time you've come into a bear market lows, you have traded at those areas for months. Long liquidations there. Accumulation trend score, I mean, just massive. And again, again, you see people capitulating, also buying on the way down. So, yeah, I mean, it is what it is, right? This is very much pain. This hurt a lot of people. So let's go out to our realized cap versus market cap, the MVRVZ score. This asset or this technical indicator has also been a pretty good determiner of when the market was undervalued or close to the bear market lows, if you will. So this particular area I want you to pay attention to, because the first spike into it, you didn't stay in there very long. So when price started to trade outside of that, how many people do you think, well, I don't even know if this tool was around back then, but how many people do you think thought that that was the low? And then price traded there for a long time, made a new up move, and then a significant move lower. Basically what I'm trying to say is you were inside of undervalued for a very long time. From August 7th, 2011 until January 1st, 2012. So a few months. Same scenario over here, right? 2013, 2014 bear market. You were inside of undervalued for a long time. And then finally we have, the last one. You were inside of that green area for a long time. You just hit there. We just hit it. Right there. I mean, I can't really blow it up because that green line will disappear if I do, but we finally just got there. All right, we just got there. Now, this is calculated from market cap and realized price. Here's your realized price. All right, this has been pretty much the metric posted all over Twitter for all over ever. I mean, whenever price comes into the realized cap, that's where people start to look for potential buying opportunities. All right. It's happened, but you can see that, it bounced off of this thing several times before, traded under it for a long time before you got back above it. We're just now hitting it. Just now. All right. So you could wait for the price to trade under it for a good amount of time before you start to look to be a buyer. You can start to add here if you want. It's your money. It's your risk. Just make sure that you understand where your risk is. So MVRVZ score, you're in the undervalued regions. On the Bitcoin realized price metric alone, you have hit. There you go. Boom. So we're starting to basically come into the region where you can say, yeah, the bear market's legit. It is legit. We knew it was legit a long time ago, though. All right. So what you got to do, you got to wait for support. You just have to wait for support to be formed. And you should probably wait for the daily support to be formed. We do know that we have FOMC, and it is tomorrow. I am pretty sure that there is an expected 25 basis point hike expected, but we could see 50, and even there's been a few people saying that they're expecting a 75 basis point hike. I think the market will freak out if you see a 75 basis point hike. I think as long as you're 50 and under, you're going to be okay. The market definitely does not like it when you raise rates too quickly. We've seen that on the S&P 500 a couple years ago. Let's go over here. We had a pretty good size down, a down move. That was March. That's not what I'm talking about. This over here. All right, so this is September 2018. This whole entire down move was based solely on interest rate hikes from the Fed. He started talking about them here, and then, it went on a while, and there wasn't no more talk about them, blah, blah, blah. Things started to go up, and then boom, we had interest rate hikes until, you interest rate hiked too much. And then the market had already sold off and built this big consolidation formation, if you will. And the Fed decided to cut hike one more time. And for them to hike that one more time, that threw the market down all the way. It was a pretty big move. I was trading this when this happened, and the Fed did like a complete and total reversal. They went from being uber hawkish to uber dovish, and that caused the rebound. So interest rate hikes, the markets typically don't like them. So if they keep hiking too fast, too quickly, then the market's going to come off too fast, too quickly. So the Fed's probably going to allow the market come off a little bit. It already has. They have to get in front of inflation. It's the most important thing that they have to fight against right now. So I think they're willing to let the market suffer a pretty good sized drawdown. We did hit 20% on the SPX, so we are technically in a bear market on the S&P 500. 20% off is what you need in order to classify it a bear market. It's been pretty easy trading this thing. It's been systematically sold into levels were respected. It was fantastic. So we've had a good year this year already, and we're just halfway into it. We're just getting started. So many more months of bear market, I believe so. I absolutely 100% believe we're going to see more downside. I do believe that this isn't the low. But I do believe we're in an area where that low can start to form itself. What we really need to see is we need to see inflation start to come down. If what the Fed has done is working and inflation starts to come down, the markets will more than likely base out. And in that scenario, that's when you want to start to look for your daily support levels to be a buyer. But we need to hear what the Fed says. We need to hear this meeting tomorrow. We need to see what is in the future, because this sell-off could also be the market pricing in a big move to the downside. This big sell-off could be the market pricing in that 75 basis point hike. So please don't be trying to get short down here, because if they only do 25 tomorrow, then more than likely you're going to see a big bounce. All right. What we want to hear from the Fed tomorrow is that they have seen in their data that they may be able to get in control of inflation. And then we want to hear we want to see the dot plot, see what they got in store for next year as well, because they had a lot of hikes next year as well on the first dot plot matrix. But we'll see what they say. I'll be watching it, so we'll see. But if inflation starts to get control of inflation, then we'll probably see the market start to base out. And then we can look for daily supports in order to become a buyer. Make sure you do this with very small position sizes at first, because this is going to take a long time to happen. Good morning, Heath. You were right. Thank you very much. It's not about being right and wrong in most cases. It's just being prepared, right? Being prepared. I was just prepared. Everybody else was not. I don't, look at it in terms of right and wrong. I look at it in terms of P&L. I did not get short this last move. All right. Full transparency. I missed it. We had a meeting this weekend on Sunday. We had our Patreon and channel members live stream, and what we were discussing is we were looking at Bitcoin trading sideways Monday and Tuesday going into Wednesday, and we were looking for a retest of this week's open or a little bit below it. We were looking for a tag of 29,000 to get short. But, the move started happening over the weekend, and I don't chase price. So, I didn't catch that. But, I caught this one, and I caught this one. So, I'm doing good, right? I'm in good shape. Not really worried about it. That was $26,000 was my bear market target. We hit that there. Boom. Then I had another target that I didn't get involved in. It's simple as that. I have to have a setup My setup has to occur before I get into a position. This thing just started to bleed on Saturday and Sunday, man. So, I was waiting for Monday to see what the move was going to be, anticipating that, that move on the actual CPI print day could potentially be faded. But when you see continuation, then that, your thesis is wrong, right? We were seeing continuation on Saturday. So, since we've seen that continuation on Saturday, my targets were this wick low down there, 25.38, and then that 3-day level over here. And we are much, much lower than that now. Those were my 2 targets for this week to the downside. So there you go, right? We're there. We've went well beyond that. Looking for new short positions down here is getting sketchy. I don't want to be a seller when we're oversold on the 3-day, on the daily, on the weekly. You're oversold. Boom. I mean, big oversold on the daily, guys. You're big oversold on the daily. So we'll start to look for that bullish divergence, right? Let the daily find support. Let it get a bounce. Let it come back down. Maybe you get a big stab lower. Maybe you get some kind of divergence going on the daily time frame on the oscillator. I mean, if you want to buy now, buy a little bit more later, buy a little bit more later. Just make sure that you manage your downside risk. Please make sure you have a stop loss and make it wide, right? Make it wide. What is the potential for downside? Where could we potentially go? All right, let's look. Let's look. All right, so this is the yearly chart. Yearly charts is what investors base their trading decisions on. Your macro guys, there is where you could potentially go. And that's $13,863.13. That price is the original Heath level. That price is where the term Heath level was even coined. And it wasn't by me. It was by others in the CTM. And that was when we were trading under it, right? We were looking for that to be resistance, right? This is the last cycle. Boom, right there. So when we got back over here, we were looking for this to act as resistance because, it is what it is, right? Jordan wasn't, to be fair, because we had already had the halving. He was looking for it to continue. But, it did hold as resistance for a few days. But look at your closes, how they're getting higher and higher and higher. And the more days you do that, then you're breaking out. But that price is the original Heath level. And all it is yearly resistance. That is it. That is yearly res. And you tagged it perfectly once there. Here's your breakout. Never came back for a retest. So that's where it can go. That's where it can go, unfortunately. We know it for a fact. Right? That's old res. There's your old all-time high. So you're closer to your old all-time high than you've ever been before. So basically from where we are now to $13,863 is a buying area. One could pretty much do something like this. This is all a buying area. And that's going to be a very wide zone on daily. Right? If you look at past price action, see the bear market moves that we've got, it doesn't look like that's a far cry. But it is. It's a long ways off. And I'm not expecting that. I'm just simply saying that's, I don't even know how I could say that. Expectations of that being hit? Absolutely not. But, far end, way out in the middle of nowhere, could it be possible? Yeah, absolutely. It depends on what the Fed says tomorrow. We're going to be waiting for that. Other assets, Euro USD, big move to the downside. I got short Aussie yen. Haven't done anything else. Pound dollar, we were looking for this to roll over. It did. There's nothing to do now. Obviously, you're just moving down. This thing here, we were looking to get long this when we were at this level. I missed that trade. That was a fantastic trade. You basically went straight up for multiple days in a row. We are looking for this thing to potentially start to get stretched out a little bit. I mean, that's a little bit stretched out. The Japanese yen almost hit all-time lows on the currency futures. Here, that's your all-time low on this specific chart. The Japanese yen is usually a risk-off currency, so this thing should have had this kind of move to the upside while this bear market started, but we're in stagflation, and yeah, they decided to sell it. This is the first time I've ever seen the Japanese yen act like that in an obvious risk-off environment where it got pummeled even harder than your risk assets. And the Swiss franc is the same exact thing. I don't have the Swiss franc currency futes, but we can look at, what is it, the CXY? No, it's the SXY. Yeah, Swiss franc. This is your, I mean, look at that. Yeah, it's hard to say, right? Usually these things is where safe money goes to. That's where people go when you got risk off. But they didn't do it this year. So markets are always changing, ever evolving. Always changing. Yes, the Swiss, straight up, there's not a whole lot to do because of the massive move that we've just seen. I mean, yesterday's move on the dollar was huge. Now, do we have divergence? We damn sure do, right? Daily div on this. Okay? There it is. There's your bearish div. So it's possible that we see the dollar start to come off. We stretch it out here. All right. So there's nothing really here that would be concerned of any liquidations going on. So it was these last two massive swing highs from 2016. January 2017 marked the high of the year that year. And then over here, you had another massive swing high that happened in March. We liquidated both of those. Really good. Had a nice pullback. We were looking for that to catch support. It did. Boom. Up. That's what we were looking for. And it played out absolutely flawlessly. Now that we have liquidated that swing high, you won't have divergence on this until this weekly closes, but if you close here or lower on this weekly, you're going to have bearish divergence. Well, you're probably going to have bearish divergence no matter where this thing closes, actually. In order to get up there, you would have to get to 107 more than likely to get back above that. So, yeah, I'd say that you're probably going to have weekly bearish divergence on the dollar. You got daily divergence. It's already there. It's already set in stone. Yesterday's closed made that a fact. A fact. We had div there as well. Boom, boom. So this pullback was probably this divergence playing out. This swing high to this swing high. This pullback was that divergence playing out. So who knows what's going to happen here. Just be careful. Risk is on the table, and we got a big meeting tomorrow, guys. Massive meeting tomorrow. Very important. We want to see him. We want to hear him say that they have gotten control of inflation and that things are looking good. We hear those words come out of his mouth, and then he proves it by only hiking 25 basis points. I do honestly believe that you're going to see a bounce, and that could be the floor for a while. All right, that's just my opinion. All right, since there ain't really much else to talk about, I mean, other than levels, gold was getting crushed. And it still got crushed even more. The only way I see gold getting a bid from here is if they hike 75 basis points. If they hike 75 basis points and the market has another 15% sell-off, then gold probably will catch a bid. But money is obviously gone into the dollar. So that's where all the money went. All the money came out of the SPX, came out of the Bitcoin, came out of everything, and went into the dollar. Because this thing, year to date, has just been a freight train. That's your year to date chart right there. Freight train, guys. All right. Let's see here. What we got? Got 110 people in here, 104 people in here. That's crazy. Little old me. Thank you guys for being here. Thank you so much for your time. Good morning, broskies. Good morning. All right. Good morning, Michelle from the UK. Wonder what Tuesday has in store for us. I think it's probably going to be a lot of sideways today, simply because we got the meeting coming up, the FOMC. Good morning, traders. Good morning, everybody. K4 Liberty, morning all. We didn't pump much, but we did dump. The dollar pumped. The dollar pumped, my friend. Heath with the morning knowledge. Yeah. Let me see here. K4 Liberty. Don't forget to hit the likes. Yeah, if you guys don't mind smashing a like. I guess people say it helps. Everybody says it helps. Maybe it doesn't. But yeah, if you don't mind, I appreciate it. In Bitcoin history, I wonder if fact of high inflation for first time equals out QT with a few fake outs in between. Somewhat similarly in equity markets, inflation propping up earnings. Well, they're still looking for double-digit earnings. I don't understand how they're coming to that conclusion, but they are. So yeah, I mean, I can see that. This is the thing. Crypto wasn't invented when the QE started, when quantitative easing started. So I think, that's why I say that we could potentially see a lot more downside. I think that, this year could be the first year that Bitcoin dips back below an all-time high simply because of inflation. Inflation is a very scary thing. Inflation is the destructor of countries. If your inflation gets too high and the government cannot fix it, then either you switch currencies or you have a civil war. But I mean, the government prints money, right? The government prints money. They're not supposed to, but they do. And they've been doing it across the world for a long time. So we're in a whole new regime, everything's different. You listen to the Fed. If you don't take anything from this video except for one thing, take this. Listen to the Fed. It has worked for me since 2008. If you just listen to what they say. That's why I got bearish in November. I mean, in November, there were people, like, you could see it, like I was pretty close to the same amount of followers as them across the board. But I started talking about the bear markets coming, maybe potentially, and, their followers explode to the upside because they're bull only. I mean, it wasn't until they got the 50% drop that they started to get a little bit, even just a little bit backsteppy. But we were talking about it because of the Fed. It's the Fed. The Fed said in October that they were going to start raising interest rates and quantitative tightening. That is a big, huge signal, right? That's when you topped out. October, look, this is when the dollar started to get its rally, right? You were at the lows pretty much. Coming in here October, November, Fed going to hike interest rates. Boom, right? So that's why we were talking about it. So, I mean, it is what it is. Listen to the Fed. They will tell you if it's time to start investing or if it's time to watch your risk. That's what they do. But yeah, inflation is definitely something that Bitcoin has never seen. So, anything is possible right now. Not enough buying volume to turn the tide in Bitcoin. I wouldn't even worry about looking at volume simply because you don't know if it's buying or selling volume. Just because the candlestick is red does not mean that was all sell side volume. This candle, whatever color your candle closes as, that's what color this volume bar is going to close as. The only thing this tells you is how many Bitcoins were traded on this day. It doesn't show you what price was the most Bitcoins traded at. Just on this day, that's how many Bitcoins were traded. Yeah, I mean, yesterday we had a little bit of volume, but if you go out to the weekly, you're going to see that the volume that we had is nothing in comparison to what we had on this day or this week. Volume is nothing. Not yet. I mean, it's only Tuesday, so we still got a long time. I'd say at the end of the week, you're going to be up pretty high on the volume bar. But I mean, I never could get a statistical or even a probable edge trading with volume, other than, holy shit, a lot of volume occurred on this day. I mean, that's it. That's the only edge you can get from that. Wow, a lot of volume happened there. I know a lot of people, or some people, use this metric with other indicators to potentially call market bottoms and market tops, but there's other indicators that you can use for that as well, like RSI, for instance. That thing is overbought, you don't want to be a buyer. If it's oversold, you don't want to be a seller, right? That's all it says. That's all it tells us. But we haven't gotten much volume down this week yet, and already the candle is big. That's a big weekly candle. So I'm sure this volume will absolutely start to basically grow in size over the next several days before the weekly closes. This is the volume that people should be looking at, right? This is your volume by session. That's your daily range there. That shows you where the most amount of volume traded at what price. And that's what you want to basically see, right? We know that most of the volume traded right there. 23,431. You know what that tells me? That's where the stops were. That's where the stops were. So we can go Alt H. There we go. Now we can drop this indicator. We want to drop this indicator here. Close this down. Go back to the daily. There's where your stops were. 23,487.87. That's where the stops were. That's what price was reaching for. Now, if that's where the majority of the stops are, and you get up there and then you start to come back off, this is people waiting for price to get back to their stop. They're waiting for price to get back to their stop. Price got back close to their stop, so instead of eating a massive 20 or 30% loss, they ate a small loss. And they're like, shoo! Right? You can see this stuff play out on the chart. That's why we look at candlesticks. It's a sentiment gauge. It shows you what people are thinking. You can see it play out. That's where the stops were. Now you're under it, so we'll see what happens. Give it a few days to build in daily support. After that occurs, then you can start your accumulation process. But make sure you put that stop low. You want to only risk a specific percentage of your overall portfolio. So hopefully you guys you'll learn to do that. Good morning, everyone, says Danny B. Good morning, Danny. How's it going? Love your channel, man. Thank you very much, SC. I appreciate that. Could you quickly look at the XCAD chart? XCAD chart on KuCoin. It's showing unusual strength during these times. I do not know what XCAD is. USDT on KuCoin, but we'll go look at it. Yeah, okay. I don't know what this asset is. To me, to be honest with you, I don't understand why there isn't a cryptocurrency like the VIX or the VVIX even. I mean, it'd be easy to do, wouldn't it? Anytime there's volatility in Bitcoin, your shitcoin goes up, right? Why haven't they done that yet? I don't know. Somebody might be smart and do it one day. I guess the technological figuring out how to make it work is going to be the difficult part. I'm not a tech guy, so I can't do it. But there's an idea for any of you that are tech guys. Make a shitcoin that goes down when Bitcoin goes up when Bitcoin goes down. Is that what's going on here? I can't tell you because I don't know what this asset is, right? You're probably going to find a few outlier shitcoins that are not experiencing the weakness that Bitcoin is, but just give them time. Just give them time. Right now, I can see already that there are levels that are attractive. I don't know what it is, though. It's been bullish the last 4 months. You're above 2-week res right now. So this 2-week candle closes in 5 days. So on Sunday, if this thing closes above $4.50 or $4.16, then yeah, you could potentially target $6.20. This old support level there, if it closes above that. If you close below that, then this is going to look like a stop run. And now you're going to probably see it go lower, right? Is that your biggest, tallest swing high? in the near term. So if this was a stop run, it absolutely 100% did what its job was, and that was to liquidate everybody. So we'll see if it wants to go lower now. You're into daily supply. Right there's daily supply, 450. So if you're going to sell it, if you think it's going to go lower, maybe watch how this thing closes today in reference to that. If you're looking for the near-term trade. The 2-week trade is a longer-term trade. Right? But yeah, I mean, there's a couple of them. There was another one, too, that someone was talking about on Twitter. Let me see if I can find it just real quickly here. I can find it in my notifications. Just bear with me, I'm sorry. I want to look for this. It's got to be above this stuff. I don't know where it is. Alright, yeah, I can't find it right now, and I can't remember who it was. Maybe I just went way too far. Yeah, there he is, Crypto Bull, MTL. I don't know if Crypto Bull is with us right now, but he's on Twitter. He was talking about the same thing happening on MTL. So let's go look at MTL. It's seeing the same thing you just said. It's seeing strength while everything else is crashing. Basically, I told him, though, that it's probably more of a selling opportunity than anything, right? MTL 4 hour, this is interesting chart versus Bitcoin is crashing, but MTL hasn't really budged. If anything, it's gone up. I don't know of anything about it, but and I said, if anything, you should look to sell into resistance. If there be an opportunity, it's likely lower. Well, it went lower, right? There was resistance. Said to watch resistance, and that would have been your entry. There's resistance. You didn't get a perfect tag of it, but you could have traded that. And down was the entry. That was the opportunity, right? So what I'm trying to say is, yeah, some of these cryptos are going to be outliers. You might even have one or two that never goes down. And throughout Bitcoin's bear market, maybe it doesn't ever go down. That just means that people believe in the project and they still love it. So, but in most cases across the board, if you have a shitcoin right now going up while Bitcoin is crashing, look for resistance and short that beast. It's as simple as that. That's what I would do. If it's going up, I would find res and I would short it, because that means there's probably more meat on the bone on that one. Right? Some of these things, I made a couple 100% on some of these things that had alts on the bone. XMR, that's where we shorted XMR. Remember, same scenario. This thing was bullish on the year. Of course I want to short that. Bitcoin's in a bear market. Look at that. We shorted 278.67. That was our short entry on this asset. We have long since closed that position. I'm just saying. We look at that and then we see an opportunity there. All of these, not all of them, but waves, same thing. Got well above the yearly open. There's your yearly open. That is an opportunity to sell. Well, we know what happened to Luna. We don't even want to look at Luna. This is another one. iOS above the yearly open. That's a selling opportunity. XRP and ETH did. That's when we shorted Bitcoin. Ethereum Classic, well above the yearly open. That's your selling opportunity. Doge at the yearly open. Selling opportunity. Zcash above the yearly open. Sold. So it's the same scenario. If you're seeing a cryptocurrency with strength versus Bitcoin being weak, look for resistance and potentially look for that shorting opportunity. Oh my gosh, there's a ton of comments under me. Sorry. Markets also don't like inflation. No, they do not. TRX and BNB, please. All right, we'll look at TRX because I've been ranting for a while and only got a few more minutes before we're going to wrap it up. Let me go to T and see if we can look at it on KuCoin. Oof. Oof. Look at that. Resistance held. Down. Man, that was a massive move yesterday. You got more of that today. I mean, guys, that's what I'm trying to tell you. I mean, when you see stuff like this, it's likely a selling opportunity, especially if you're in a bear market. And if you're not subscribed to this channel, make sure you click that red button right now, because while all of the bulltards on Twitter were looking to buy this market over here because Bitcoin was going to $400 million in 2022, we were preparing to sell. We were getting out. We were dumping. And look at here. Boom. There. So, yeah. All cryptos are going to, pretty much most of them are going to follow Bitcoin because your liquidity providers are usually the same companies. There's many of them that provide liquidity. They're the market makers that everybody likes to blame their losing trades on. They do not trade like that. They do not give a shit where your stop is. They are not looking for that. Not spot arbitrage market makers. They are only buying on exchange, selling to another exchange to get that spread. They provide the liquidity. They do not move the market. They do not move the market. They just provide the quotes. All right. So yeah, make sure you subscribe because we're all over this thing. Always. Not just today, not just yesterday. Ever since I've been a public channel, ever since I have had a public Twitter, we are always trading. We are always over this stuff. If I'm baffled, then, everybody will be baffled. This thing it's bearish. It's a bear market. And we need the Fed to say we've gotten in control of inflation and we are going to slow the rate at which we hike rates. We hear those words out of Jerome Powell, we're going to be buyers, right? If he comes out and says, well, inflation is still rampant, blah, 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 then yeah, you're going to wait to be a buyer. You got to wait for inflation to get in. You got to get in control of that. Let me scroll up a little bit and just look because I'm getting behind. Not enough. Okay, we read that. Celsius will have to sell assets. Also, we are selling a little contagion in alts. Luna to Celsius to XX. Yeah, I mean, someone asked me that also this morning about alts or companies that own Bitcoin, for instance, like Michael Saylor, Tesla. Guys, they're smart, right? Their downside is protected. Michael Saylor is only buying Bitcoin. He is probably also buying a shitload of puts. Okay? So please understand when you see him uber bullish, I'm uber bullish on Bitcoin too. I have a spot account and a trading account. I add to the spot account. I've added to the spot account, right? So yeah, I'm getting ready to start to shift my bias as long as the Fed basically lets me know that. So if the Fed tells me that it's time to start looking to apply risk, I will start to apply risk. But the thing is it does not matter where Michael Saylor bought his Bitcoin. He is a billionaire, right? If he owns $5 billion worth of Bitcoin, he probably owns a similar amount in puts, okay? So please understand, they are smart. They do not lose money. They are rich. Rich people don't always lose money. There's outliers with that, of course, but you get what I'm trying to say, right? They're very smart. He's got some of the smartest people in the world looking after his money. His money is safe. Same goes for Elon Musk. His money is safe. Tesla's money is safe inside of Bitcoin. They are protected. I guarantee it. But if you want to see if they're selling, just look at the SEC filings. They'll probably let you know when they start exiting their positions, or if there was a forced liquidation. They're not retail. It's likely not going to happen. To be honest, in Michael Saylor's case, he has a board of directors. He's the CEO of the company. It's his company, but he's a publicly traded company. That means he has a board of directors. Is it the board of directors can absolutely force him to sell? Yes, they can. But if that risk is protected, they won't. They will not force him to sell. They want to know what is the risk. It has to be an absolute thing. You can't just wing it when it comes to risk in billions. His risk is mitigated. All right, that's a promise. TRX got crushed. Let's look at BNB real quick. We'll look at it on Binance US. It's crushed. Same scenario, man. Big liquidation right there. Boom. A lot of these assets are 80% off, right? I don't know how far this one's 66% off. So, yeah, a lot of these assets are off a lot. It's going to be like that. It's going to look like that for a while. Wait for the inflation to get it handled. Once they handle inflation, we'll start to buy some of these alts. We'll buy a lot of things. Thank you, Edom, for that compliment, my friend. Your P&L was right. Yes. Yeah, that's the metric I go by. I don't go by my call outs. I go by my P&L, right? That's what I'm looking at. That's what tells me if I'm doing something right or wrong. Can you please have a look at Euro USD and silver? Well, silver, XAG USD, silver, man, it looks like gold, but worse, right? And it's the same scenario. There isn't really much alpha that you can generate inside of silver simply because you got to pay people to hold it. You got to pay people to hold it unless you're trading paper silver. And nobody really does that anymore because there are other financial instruments out there that you can generate alpha in a bear market, right? So silver and gold are like those things that people will invest in and they will hold on to them for a very long time. There's a lot of money inside of it, but it's more or less, they're just holding it because it's gold and silver. But it's been getting killed. It has not really done anything, right? That percentage move to the downside, it looks bad, but it's, 30%. So silver's in a bear market. But you will typically get these moves up in silver and in gold when you have very scary times going on or like a war breaks out or something. But then that since got sold into. So is it the low? Can you look for support? Yeah, you can. I don't know if it's the low, but you can definitely look for support. You're not oversold yet, but it does look like you're trying to hold support. So watch this price here, 21,111. So 2111. On a weekly closing basis. If this week closes above 2111, then you might have a shot. There is no short to take because you don't short into support. But, if this level holds, then you can potentially look for long side trades. I just think you're going to see more downside. I don't think the downside is done on gold or silver. Right? I just don't. That's just my opinion, though. It's just my opinion. It's hard to generate alpha in this stuff. All right. So Euro USD crushed. That was the daily level. There's your yearly open. Let's get rid of these because these are long gone. It looks like you're trying to build in bullish divergence. Nah, not really. You're still higher. Never mind. I take that back. Let's go look at the daily. Yeah, there's really no divergence there because price has not made a new low yet. So, there's not a trade to take on it today. I don't think there's going to be many trades today because of the meeting tomorrow. Yeah, there's really nothing to do on it today. You did have a spike up and it's since been sold into. Let's go look at it intraday charts real quick. Yeah, I could be honestly, maybe this thing makes a new low. Maybe. And then trade sideways. I just don't see much happening. This thing's been selling off all week. Same as everything that isn't the dollar. Everything's been getting crushed. It is what it is. ETH USD. And then I'll have to wrap it up, guys. Because I do got to look for some trades. I haven't found anything yet, but we'll look. ETH USD. Let's go out, check it out. See how far we got into this. We want that. Boom. 200 simple on ETH. Oversold on the weekly. Boom, boom on ETH. ETH has, 200 exponential. The 200 simples, there's not much. We can't really look at that because there's not enough data, but we can look at the RSI and we can see that, basically when this thing is hit oversold on the weekly, it's typically been a decent spot to look to become a buyer again. And you're going to see that across the board on a lot of cryptos more than likely. Here's Algo. Algo's hitting oversold too on the weekly. All right. I'm currently 300% up on an Algo short right now. So, yeah, you're getting ready to hit oversold on the weekly, probably on most cryptos. So, is it a time to buy? I'm not a diehard crypto guy. If you're following me based solely on technical analysts and looking for trades. That's what we do here. We look for trades. We identify high probable entries, right? So what we got to do on ETH and Bitcoin and a lot of other assets right now currently is we got to wait until tomorrow. Then we'll look for support. Let support build in on a daily time frame at the least. At the least bit. Wait for a daily close, then watch that bearish close to see if it's holding as support. If it is, you're trying to buy support, but you're doing it with very small pieces of capital right now because like all swing lows, people try to buy them, right? And they typically get liquidated. So I would not be surprised if this wick low stays put for a day or two and then you get down there liquidated. We don't know where the bottom is, but we know that we're getting close to it. We're we're at the realized price. We're at the MVRV Z-score. We're at the weekly RSI. We're at the 200 simple on the weekly. We're at an area where you could potentially start to look for buying opportunities for sure. But we need to listen to tomorrow's meeting. That's the most important thing. All right, man, there's a lot more comments that I didn't get to, and I apologize about that, guys. It's just, it's hard to keep up when there's this many people in here. You guys have a fantastic day. If you have any questions about anything that I said today, just make sure you drop it down in the comment section. I do read every single comment, and most of the time I respond to every single comment. I will answer your question. It's not a big deal. Thank you so much for your time. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.